We got a lot of interesting data coming out, including an important reading on consumer confidence, which was weighed down in the last clip by inflation expectations. And for more on what American households might be looking to on the front when it comes to inflation, I want to bring on Yahoo Finance's Brian Cheung with the latest look in terms of a Fed survey there for us today. Brian?
Well, as you mentioned, Zach, very interesting data read that we're getting ahead of that big inflation print expected tomorrow. And this coming from the New York Fed survey of consumer expectations, noting that among the household heads that the New York Fed surveyed, the median member of the American household saw inflation of something close to 5.2% over a 1-year period. By the way, that's a record that we've seen in this New York Fed survey, although the survey, to be fair, is only about 8 years old. But you can see where the trend has been over the past few months. American households apparently seem to see inflation expectations rising higher and higher, at least over the course of this summer. And when it comes to sentiment change, this is likely an unwelcome development for policymakers at the Federal Reserve, who have insisted through most of this year that inflationary pressures were likely to be transitory. Now, a number of them still insist that things like supply chain constraints are likely to fade in the future, but did acknowledge that a lot of these price pressures are a bit more persistent than they had originally thought. There was a lot of speculation at the earlier part of this year that if inflationary figures did rise, that they might fall by the end of this year. A number of Fed officials saying that might not be the case any longer. And things like consumer expectations could bleed through into realized inflation. Keep in mind, it's not inflation expectations that the Fed targets when they say they have a 2% target. It really is realized inflation. But if people are expecting more inflation in the future, they might try to pull forward consumption and investment in the present, which could really lead to a self-fulfilling prophecy of price increases. Now, what's interesting is that this does deviate a bit from market-based measures of inflation. When you take a look at something like 5-year break-evens, the spread between 5-year treasuries and 5-year tips, you do actually see steadiness through most of the summer with expectations over a 5-year period of something closer to 2.5%. But when it comes to survey-based measures, it's telling very much a different story, which kind of puts the Fed in an interesting spot with regards to that deviation, Zach.
Yeah, I mean, that has kind of been, one of the concerns there is why we aren't seeing some of the way that some of these things are trading not match up. And of course, you still have the Fed purchasing assets on the back end here. And so, when you dig into what you're describing there, you can see kind of realistic expectations here. But at what point are you expecting any of those things to change, as we move farther and farther along in this idea of whether or not any of this inflation that we're seeing right now is indeed transitory?
Well, that remains the big question here. And a lot of this might be due to the Delta variant. When you consider, for example, that it's supply chain issues and just the price of, for example, shipping goods that's really increased. We spoke on Yahoo Finance with a grill CEO who said that the cost of a freight operator from moving from China to the United States was something about 10 times more expensive than it was pre-pandemic, and that's because of port shutdowns. That has nothing to do with Fed policy, but it's hard to see those types of pressures abating when things like Delta or maybe other variants are still flaring around the world, and many countries not vaccinated nearly as much as the advanced nations are. So whether or not this lasts deep into 2022 certainly remains a question, but I think by all accounts, it seems like the optimism that inflationary pressures would fade by the end of this year are very much not being realized.
All right, Brian Cheung bringing us the latest there. Of course, those important readings coming up on deck this week. Appreciate the update.